I want to talk about Chipotle.
Yeah.
Worst PR, the worst time possible.
This is the same restaurant that fairly recently had customers get sick, again, it's believed, from norovirus. As you say, this time 4 employees feeling unwell. They shut the store down immediately. It's about 20 miles outside of Boston. This comes, of course, after they shut the entire chain of stores down recently to have like a big company-wide meeting on how to prepare food properly and some of the procedures that they take. So this is awful PR.
I feel bad for them in a way. I mean, I do.
They're a little snake-bitten, aren't they?
Fine company, but look what's happening to them.
I don't feel bad for them at all. I mean, this is a systemic problem that they have yet to address.
Morning, Kevin.
Yeah, well, I mean, they haven't figured it out yet. They still haven't found the root cause of what happened last time. This is a terrible situation. It's systemically happening, and it's affecting the health of not only the consumers but their employees. Yeah. So this is something that they need to address, and it's still trading at a high valuation because people are betting on a turnaround and they'll figure it out, but they still can't figure it out.
Remember when we were down on McDonald's, Liz?
Yeah. That's right. Investors were not loving it either. They had 7 straight consecutive quarters of down U.S. sales.
That was then.
That was then. Look at it now, hitting record highs. Why? The company went back to basics. They basically stripped down their menu. Doing less is better. So that's what McDonald's did.
Who would have thought that we'd see, not the demise of Chipotle, but the huge, a 200-point loss for the stock, just as McDonald's was turning around and starting to go up to a record high.
Right, and we've already reported that McDonald's divested Chipotle, what, about 10 years ago?
That's right.
Yeah. So,
I mean, it's like politics.
It's like politics.
Who would have thought we'd have an election like this?
Right.
Look at the big board. Let me remind you, please. March 9th. 2009.
Yeah.
That was the low for the Dow, around 6,000 and change. I repeat, 6,000 and change 7 years ago. Look at it now. We're up 60 points at 17,024. So, Kevin, if you want to throw cold water on this wonderful bull market, here's your chance, lad.
Beautiful. Well, all good things must come to an end. So, you know what? If we actually just take a look at GAAP earnings on the S&P 500, they're at $90 for the year. That's 22 times earnings. That is really expensive. That's when you take companies and what they fudge around with their numbers, like what Caterpillar did. So if you take that number, you can see that there's a real disconnect from the fundamentals. 8.3% was the decline in earnings this quarter for S&P 500 numbers. And then you had the central bank's central bank, the Bank of International Settlements, saying this debt overhang is going to blow out soon. The central banks are losing their efficacy. They can't stimulate growth anymore. All they're doing is rising risky assets.
Efficacy.
Wow. Yeah, there we go.
I'm just looking it up right now.
Dan Stessich, come in, please. Now, Kevin just says, look, the bull market has gotten ahead of itself in terms of the profitability of corporations. It's ahead of itself. It's overvalued. What say you?
I think this market is a bit overvalued right now, and what's going to keep it from either falling or going up is going to be the economic data that we'll see later in the month. We've seen a bit of good data over the past month or so, not great but decent data. If it can continue, then maybe this thing will continue. But you're not going to see any massive runs to the upside. And any type of negative news, as Kevin had mentioned, could really put a lot of hurt in this market in a hurry.
Do you have a joke of some sort?
Yeah, I think this is true. It's been said this is the Rodney Dangerfield market. It's a market that gets no respect.
Oh, that's not bad. I will take that. We'll take it.
Okay, you take it. No buzzer for me.